Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, August 30th. The year's 2021. Let's talk trading. Trading friction. Just so you know, these videos are for educational purposes only. Your results may differ from mine. I bet you're wondering, what the heck is trading friction? Well, if you can remember back in physics class, when you talk about friction, it's usually one surface, rubbing against the other, and the friction produces heat and takes away energy. And, that's why moving parts usually fail sometime. It's not a matter of if, it's a matter of when. So, what about trading friction? What the heck could I be talking about? Well, we've been focused on the trader, the you part of the equation. We talk about brain management and things like that. Well, once again, it's all about you, the trader. What gets in your way of making money trading? Consider that to be friction. So there might be things that are impediments to you trading profitably. So, for example, if you have to analyze too many indicators on your chart before you can make a decision, consider that trading friction. If you have to go through, press too many buttons or look at too many charts or, you know, make a whole bunch of different decisions before you can say, yeah, I'm going to enter the trade, consider that to be trading friction. You know, and part of friction is when you have so many variables versus constants. We've talked about that before. Um, and when you think of how many different variables you have, or indicators, or pairs that you're trading, or if you're trading, cryptocurrencies, or you're trading stocks, the more you look at, you can consider that friction. It's going to take you longer to make a decision. you know and that's why, yes, I have many charts, and a handful of different systems, but most of them are usually based off of trading at a horizontal line. In fact, I was trading this morning, and then I was talking with Walmart, and I jumped in a trade, and I took my eye off the screen because I was talking to him. Then I come back and I missed out on a 5 pip profit, so I had to wait it out. But actually, before then, um, I was watching the charts and I saw this happen, this big drop right here. And so I looked at this candle. I said, price has to get back to that range. And so somewhere around here I went long, and somewhere around here I exited. And then I was just kind of going back and forth here. But the point is that um, I didn't wait. I missed out right here. I didn't wait. I didn't leave things alone. So once again, trading friction. I got in my own way. Why didn't I just leave it alone? It'd be real simple. I entered somewhere here in the 40s. Why did I enter? Because you guys know by now, I call 40 the launch pad. And usually it launches from 40 somewhere to the 60s. So I figured it'd come here to about what, 59? What was the open? 59.5. And I, in hindsight, I figured right. So how do you remove the friction? Well, one way is, as I mentioned before, you set and you forget. You put your trade on, you put your TP on, you put your stop loss, and you just let the market do what it's going to do because you have no choice. You can't stop the market from doing what it's going to do. But as you're in the trade, sometimes you manage it, and then you see it went here and then it came back here. You might get scared. Then you exit out of the trade with a pip or two, and then you see it just takes off the other way. And then you beat yourself up. No, you just have to learn to set and forget and just leave it alone. And that creates the least amount of friction. I mean, you've already made your decision. You decided to go long and you made a decision. Well, I believe it's going to hit here. Well, stick with it. Either you're right or you're wrong. It's time will prove it out one way or the other. Now, of course, the more money you have per pip, um, the more you have to gain or the more you have to lose. But it's just one of those things where sometimes you leave it alone. And in fact, on this big drop, I was short. And had I left things alone, when I woke up, I would have made a lot more pips on the short side. But it was just like, wait a minute. It went down and I didn't exit and it went back up. So when it was coming back down again, it's like I jumped in. But once again, I had a take profit somewhere around here, but I saw it bounce, within 5 pips. And so I got my own way again. So, when we talk about trading friction, it's making things smooth. If you have a couple of pieces of wood and they're rough, then there's a lot of friction when you drag one across the other. But if you sand it and you oil it and you have a really smooth surface, then there's a lot less friction. And that's, kind of what we're talking about here. I mean, on this screen, there's just a handful of indicators. I can look here and see what the candle colors are. Or if I turn these on, I could look down here. I can see how much time is left in a bar. I can see, every 10 pips, I've got the sweet spot lines, and I can see where the 3LZZ are putting in 1, 2, and 3 balls. And then I can see where I've got highest lows and lowest highs on the 1 minute time frame, even though I'm looking at the 5 minute, because I want to make sure I go along with the 5 minute candle color. So, right here's a good example. Price came down like 5 candles in a row, and then it's like it got into the lowest high area. And so since that candle was white or bullish, it's like go long here and you'd be up a couple pips. Now, some people say, well, what's the big deal? Well, if you're trading $50 a pip, that's $100. So, that's just what it is. If you're trading $10 a pip, that's $20. I mean, you can start, putting some real money in your pocket, in your portfolio that way. So that's what I'm talking about, trading friction. Now, on the other hand, we talked about things that get in your way, and we've alluded to things, to take the friction away, such as the set and forget. But, minimizing the number of pairs you trade, that's less friction. Sometimes if you're trading rat trades, you pick one direction, you stick with it. That minimizes friction, trading friction. And there might be something else that gets in your way. Once again, the number of mouse clicks you have to do to enter a trade. If you have to reset your position size each time and move your stop losses around, that's all friction. Maybe you get an EA to do it for you. Takes away the friction, makes it easier on you. And then there's one other thing. Sometimes some people rush into trades. And so, for example, maybe they'll jump in this trade a little early only to see it go down. And when it comes back up, it barely gives them a profit. Or they might get in the trade too late. Well, maybe there's something you could do to add friction so you don't make those blunders, those mistakes, those missteps. So maybe you need to move your mouse away or unplug it. So before you can get in the trade, you got to plug the mouse in. Now, that might sound counterintuitive to what I was just saying about having other things set up so it's done automatically, but it depends on what's causing you friction. So, and then sometimes you want to have friction work to your advantage. So once again, if you're always rushing into trades, putting some barriers up so you don't rush into the trades, it's like, wait a minute. I mean, I've even got a couple of egg timers, and this is back in my stock trading days. If I decided to go long, I'd have to turn the egg timer, a little hourglass, and I think it's a 3-minute timer. In fact, I've got two of them sitting here, and I think it lasts for about 3 minutes. And I'd have to let that thing go and go and go just to slow, as they say, slow your roll. That slowed my roll, and a lot of times, yeah, did I miss out on some trades? Yes, I did, but more often than not, it kept me from jumping in too quick, and that was the whole purpose. And you see, in trading, there's nothing that's going to really work 100% all the time perfectly. So every trade you get in doesn't go against you, and when you get out with a profit. It's really difficult to do that. I mean, even Walmart has some losses every day. And he's had some long winning streaks as far as trades in a row, wins between losses, long winning streaks. His winning days, he's got long streaks. But that's because he's removed a lot of the friction. He's distilled it. In fact, we were talking about evolution the other day. I think I have to get him to send me a couple of his old charts and his new charts so we can see. I think he said he could maybe just send me screenshots and I can just put them up here so you can see what he looks at versus what he used to look at. But our charts are pretty clean now, and a lot of these things are helpers because once again, I want to see the M1 lowest high and highest low, but I want to look at the M5 chart to do it. I mean, I can switch over to M1, but it doesn't give me the same signal. See here, this is where I would get in on M1, but it might not be the same. If this candle happened to be black at the line M5, I might not want to take it. In fact, there was one trade I was kind of kicking myself. I think it was this trade right here. And the M1 was short, was somewhere up here, if I remember correctly. But what had happened was the M5 candle was still white, so I didn't take that short. And of course, it would have been a nice trade, but it wasn't my trade. I'm not going to fool with the method that works and is profitable if I work it right. And as I mentioned yesterday, these methods, works for Walmart, works for me, but even he and I even traded differently, as we say. Sometimes he's in the trade and sometimes he's not, and vice versa. Sometimes I'm in the trade when he isn't, and sometimes he gets in the trade and I didn't. And we're trading the same method, but we see things differently. We react differently. He might say, no, I got a feeling, or I might say the same thing. And it's like, well, I thought you trade the method. We do, but with seat time and experience, we have these instincts that sometimes play out and sometimes don't. But just following the method as is without it, yeah, it can be profitable, but it's up to you to work it. It's like saying, this hammer doesn't work. Well, maybe you've got it turned the wrong way because everybody else can use it just fine. So that's the way it is in trading. So we'll probably talk about the same topic. Maybe I'll get Walmart on the line either tomorrow or the next day, and he can put his spin on it. So just have to remember, try to get rid of the friction that hurts you. But then again, if there's something you can do to slow your roll when it needs to be, put that friction there because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne asking you to hit that like button And this is the Rumpled One, over and out.